Hey, what is going on, everybody? Welcome to another episode of Rapid Review. Appreciate everybody joining live over on YouTube and on X. As you guys know, chat's open, so feel free to drop questions, comments, stocks you want us to look at. Yeah, anything you got, good, bad, indifferent, let us know. Yeah, as we do every week, we'll be breaking down everything that went on the overall market, the sectors, industry groups. We're looking at stocks, answering any just general trading questions that you guys have. So, yeah, without further ado, it's time for the Rapid Review. All right, you guys know the deal. Educational, informational purposes only, not financial, investment, or trading advice. Let's get started looking at the overall market trend. No surprise here, uptrend all across the board. Exposure levels 80 to 100%. Webby trend, uptrend on both the Nasdaq and on the S&P. My 50-day trend, up on both of those. In terms of how far we are off those all-time highs, S&P is 1.44% off the all-time highs, where the Nasdaq is 1.80%. We have now had 33 trading days since that rally day has occurred. So, yeah, over a month into this, what has been a crazy bull run. We'll see where we're at right now. Liz, absolutely. We'll take a look at those when we start going through some stocks. All right, weekly performance. So hasn't been the same as it's been these last couple of weeks. A little bit of a change of pace. I think for many of us, welcoming the weaker week for the first time in a while as things kind of take a breath. The S&P was up 13%. Nasdaq down 0.08%. Dow down 0.17%, and the Russell taking the biggest hit. Small caps taking a pretty big hit, down 2.37%. Closing range, the Nasdaq finishing right in that middle range for the week, but all the others finishing in the bottom half of the week. And then when we're looking at where we're at year to date, the S&P up 6.91%, Nasdaq up 0.16%, Dow up just 1.67%, and the Russell up 10.22%. So if you're looking at your portfolio, taking kind of a step back and seeing where you're at for the year right now, and if you are beating all the indexes, awesome, because that's the goal. Otherwise, we'd just be investing in ETF funds. So moving averages. All right, so first time we've seen some red pop up on this screen. The Nasdaq and the S&P still green above the 10, the 21, the 50, and the 200-day simple moving averages. So as bad as the week felt, we're still sitting healthily above every single moving average. And a lot of that being that we were fairly extended, and we've been talking about how extended this market has been every single week. So even with kind of the pullback, even with some of the rough action towards the end of the week, we're still sitting above all those moving averages. The Dow did break below the 10-day simple moving average, and the Russell did break below not only the 10, but also the 21 EMA, with, again, small caps getting hit probably the roughest this week. Looking at distribution days. So for the week, really no action at all happening on the Nasdaq. Very quiet over on the Nasdaq. S&P seeing a lot of different action. For the expirations, we had 3 days expire. You can see those here: 421, 423, 428, all expiring due to price action, moving 5% above that close for that distribution day. So washing all those days out. But we did add a distribution day on Friday as we were down on volume, leaving us with a count of 2 distribution days. Going into next week, we're not going to lose anything to time. We'd have to see a not likely we're going to see any of these drop off due to price action. It would have to be a very significant move. I guess you could have the possibility of maybe dropping this 5-4 distribution day off. But needless to say, light distribution, not a lot of selling, especially on the Nasdaq side of things. No signs of institutional selling coming into the market. So super positive on that side. Even looking at this distribution day calendar, which is just a visual showing any distribution day that occurred in the last 25 trading days, regardless of whether or not that day has expired due to price action, or not obviously due to time because of the last 25 trading days. But you could see 5 total distribution days that were gathered through the S&P and just 1 distribution day gathered on the Nasdaq. So yeah, very on the Nasdaq, we're not even seeing that we're washing these days out. It's just they're just not occurring at all, which is a super positive action. Let's jump over and take a look at the index charts. And as we always do, we'll start off on the NASDAQ and we'll start off on the daily. Liz was definitely glad this week was weaker, but wish I sold in the strengths. Haha, only trimmed. Hey, look, we'll talk a little bit about that. I'll talk about some of the stuff that's going on in my portfolio, um, selling the strength, trimming, things like that. We'll talk a little bit about the different ways to kind of approach that and how different types of trading styles may lean towards one way or the other. But I will definitely get into that. All right, so NASDAQ, looking down the daily, just a quick high level overview, right? Last October, we went through sideways action. We started breaking down. The market had a rapid recovery. We had the follow through day occur on April 8th, which gave us the signal to start buying into this market. And we were talking on this show about how we got the follow through day. Now we just need to continually let the market prove itself and allow the market to let us increase exposure due to good performance. And we got that. So if you were able to get in on the follow through day, make some buys, regardless of how you felt emotionally about what was going on in the market, regardless of what was going on in the news, and then slowly incrementally increase your exposure into the strength, you're probably sitting pretty. But we just got to a point where it really has been feeling very, very extended. And the way I'm talking, right? I'm talking as if like, okay, maybe we're starting that pullback, but we've seen this before. Like, we don't know where this market is truly going to go. I think a lot of us are hoping for a pullback, but we still don't know. So this market has just been completely going vertical. We have one day, intraday, or 2 days, I guess technically, broke below the 10-day simple moving average. So we've seen almost no pullback, almost really no sideways action, and this has just been riding up. If we're looking at what went on this week, so if we start off, Monday was kind of a lackluster day, kind of had some like churning type action. Tuesday, rough day intraday. But the close was super, super strong. And I kind of talked about that in my written article that I put out throughout the week, that we had a really bad downside move during the day, but that kind of upside reversal was super positive action. And we saw that follow up and continue into Wednesday, where we kind of had a nice rally, made all-time highs. Thursday climbed up again, made all-time highs. But we had a pretty rough day on Friday. Market gap down. We had some chop around on the day, and then ultimately closed down 1.54%. Yet we still haven't even touched this 10-day simple moving average. I think a lot of people, especially seeing like leaders, stocks that I own, MU, SanDisk, some of these stocks getting hit throughout the week. The portfolio's feeling it a little bit. And that's why that trimming into strength is so important, like we said we're going to get into. But if we're looking at the overall trend, we haven't even, like I said, test the 10-day simple moving average. We're cleanly trending upwards. And I think what's happening is a lot of us are just hoping like this is just a point where the market is going to pull back. And it would be very, very normal action to have this market pullback. To continue to go higher, it's just like you almost feel like this is going to be the more vertical we go and the harder and faster we go vertical, it almost leads us to believe that the downside is going to be that, when the pullback is going to be that much more brutal. So what we're looking at right now is trying to understand, like, okay, what is normal action? What is abnormal action to the upside, and what is abnormal action to the downside? So normal action right now would be either sideways action, ideally holding above these kind of lows on May 12th. That would be beautiful. Really, really beautiful. Get some really, really tight setups. Also, normal action, which would also be great for some entries, would be pulling into that 21 EMA. Even a little shakeout below it for a day or two and then popping right back up. That would be completely normal action. What I think would be abnormal action for this is maybe pulling in and then breaking down really below these lows over here of the April 21st. If we start breaking down into that area and we see a really rapid pullback, this market could get a little tough. But we'll see what happens. If we do just continue up next week, just keep going, and that's all we get, I don't want to say necessarily that's a bad thing, right? It's going to make this market a little tougher, especially if you're slightly underexposed. And it's going to be, it already is one of these historic runs. But look, everybody wants to keep talking about bubbles. Everybody wants to keep talking about, this market can't go up. AI is a bubble. Look, I could care less. If AI is going to be this crazy crashing bubble like we saw in the dot-com era, it doesn't matter to me because I don't know when that actual crash is going to happen. What I do know is in that bubble environment, there's a lot of money to be made. And why would I sit here and try to, sit out and wait thinking this is eventually going to crash when that could happen in 2, 3, 4 years from now? It could happen in a month. We don't know. But there's money to be made in the market right now. So even if this continues higher, it's just going to make things a little more difficult, but I wouldn't say that's a bad thing. Exactly, exactly. Who cares? Just make money on it. That's what it is. So looking at the S&P, it's really much the exact same action. I'll look at the weeklies real quick right here. Like we said, we've been talking about this every single week. It's just these up weeks, closing near those all-time highs, a little bit of calming down here. Last week, super strong. And then now, like when you look at it in the context of the weeklies, it's just like, okay, this is like it may have felt rough, but this is just a beautiful, beautiful chart. Again, to the key levels, really keeping an eye on that Thursday high, breaking towards that side. Like I said, would like to see some sideways action and then break to that side, but we don't always get what we want. On the downside, keeping an eye on the Tuesday, May 12th low. Then from there, well, obviously the 10-day simple moving average, the Tuesday, May 12th low, the 21 EMA, and then coming down all the way into like the April 21st and the April 23rd lows. Those are the kind of key areas that I'm really watching. Definitely don't want to see us break below that October 29th high. I think that would be really, really negative action to see us pull down all the way. Number one, to that level is going to be rough. And number two, it's just going right back into this kind of sideways range would not be a good sign. So the 50, the 200, though, they are always something that we're looking at. They're pretty far ways off of that, and other areas that would probably have us stepping into cash prior to those points anyway. Kitex edits. Do you have any long-term investments? If so, what percentage of the portfolio is made up of long-term and short-term CANSLIM trading? I have long-term investment stuff that is completely separate from my trading. I am for as many, I'm an air traffic controller, so I have like a pension. I have other kind of Roth type stuff and things that I have going through work that are my long-term kind of investment stuff. My trading is my trading. Like my trading account is traded as my trading account. I don't divvy up my portfolio and say this is this type of investment I'm holding longer term. Like my trading is my trading and that's it. And then my other investments are my other investments and that's it. That's how I personally handle it. I know a lot of people do a lot of different things and a lot of people are in a lot of different situations. So obviously being the job that I have puts me in a different situation in terms of some longer term investment type stuff. So let's look at the Russell really quick. Let that kind of populate. So the Russell's definitely a little more volatile, right? You got those smaller caps, so they're going to move a little more volatile. But again, even looking at this, like this is just normal, healthy action. We gapped up right around the same, right on that follow through day. Same thing. We gapped up. We were a little tight. We completely rallied, pulled back, rallied again, pulled back to the 21. We're sitting just below the 21 right now. Not like there's nothing wrong with this right now. It's in an uptrend. And I think that's some of the things to kind of think about, right? If we're trending upwards, the question I always ask myself is like, what is it going to take for me to see a trend change? And we haven't seen anything trend changing. And the reason I think it's really important to do this over the weekends is when you get those rough days, like a Tuesday, like a Friday, taking things in the bigger context. You get people that are like, oh my God, the market's crashing. It's like, it's one day. And you look at the actual trend of the market and it's just completely normal action. So this is a big reason why I do this every week and why I like doing these videos and sharing my thoughts, just because I think it's important to take a step back, look at that overall trend and just kind of draw those lines in the sand of like, all right, if we get down to this level, like I'm gonna have to start making some changes in how I'm acting and what I'm doing in the market. But that is all I got on the indexes. Don't see any other questions on the indexes. All right, let us now start talking about what's going on sector-wise. We'll let this load. All right. So sector wise, I've been saying this every single week. I've been saying this every single day when I'm writing up my articles. It's technology and energy. They're clear two leaders in this market. Tech being the number one for sure. Uh, yeah, and that just kind of is what we've been seeing. Now, what happened this week though is we saw the strength in energy, and we saw that tech kind of fell down, and you can see it was down 1.8%. But again, we've gone on such a rapid run to have one down day. Oh, sorry, this is day. Oops, my bad. Where's tech, 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 tech? All right, so tech was flat. So to have a week where we're just up 0.4%, it's not something that is concerning at all. But energy definitely leading out the week. Healthcare has been extremely weak. You can see healthcare sitting out of the 11 groups, healthcare number 10. So it showed some strength today. Do I think that means all this money's rotating into defensive plays right now? Same thing with consumer staples, number 8, showing some strength this week. I don't really see that as too concerning. Again, 1 week doesn't make a trend change. So we're just going to keep an eye on this. Well, what we are going to do, though, is we'll jump over to Deepvue just to get a little more context of what's going on with these groups. And we'll click on these charts. You guys got the weekly over here, the daily over here. Energy right now, really just like I said, there's been a lot of, especially in the alternative energy plays. Like I think, and people think, oh, oil and gas, like that's what's causing this. That's not a good sign. Especially with this AI build out, there's a lot of talk of how we need to fuel it, right? And there's a lot of talks of alternative energies and things like that, nuclear, solar, fuel cell stuff that's supplying data centers and all these different things that fall into this energy sector. So I don't see this meant necessarily as a defensive play that is like causing me a huge alarm, but this is again acting completely normal. We had big, really strong uptrend, rough pullback, rallied, made a higher low, rallied again, and we're sitting right below those right below, excuse me, those recent highs. So we'll see. There might be some real great opportunity in this sector. Healthcare, though, we're sitting below every single moving average. Everything's trending downwards. The 50 looks like it's actually making its way to try to cross below that 200. So healthcare, as long as, even though it had a good week, it's just something that isn't very interesting. Consumer staples kind of found support at the 200-day. It's been rallying. It's been trending upward. Do I think it's the leader? No. So that's probably why I'm not looking to kind of play in that area. Tech, this is just it's ridiculous. This is insane. This is great. I mean, we love to see this, especially in a market like this where a lot of these tech names are growth stocks and what we're trading. So really, really strong uptrend. Again, same thing as the market. Where would be normal action? Where would be a pullback? The 21, which is just rapidly rising. I mean, even look at the 50-day. It's just vertical, even on the 50-day. But yeah, like we could easily pull back into that 21, and that's completely normal action because we've just been up week after week after week after week. So just prepare. Like I said, we don't know, was this just one bad day and we're going to continue this parabolic move to new highs, or is this a start of what we've been saying? We've been looking for that pullback. We'll see. Financials really, really weak. Just kind of below these moving averages, below the 200-day, not somewhere where I want to play. What I do want to say, though, because this came up, I believe it came up in Discord, there are some financial sector names that I've seen people say, like, oh, I don't want to play with, like, not that Hood's doing well, but I think Webull was brought up, and some of these other fintech type companies, and online brokers and things like that. I look at those slightly differently than I look at just the general financial sector. And I think that's where it's important we got this top-down analysis. Just because the sector itself is doing poorly, there might be a small pocket of a group that is performing well out of line with what the actual overall sector is doing, because they're a little different than the general sector. And I think especially those online brokers might be one of those things. So I just wanted to bring that up because it kind of came up this week when we were talking in Discord. Communications has just been kind of in this sideways action. There's definitely some names that pop up in this sector, but this is, again, not leading. Again, tech is leading. Industrials having some weakness as it was kind of basing. Utilities has been super weak. Materials. Okay, this was one of those groups that I think we've been kind of watching week after week. It looked like it was trying to kind of make its way towards all-time highs, begin that kind of uptrend. And that Friday action of breaking the 50-day, just how a lot of the materials kind of acted on Friday and levels that were broken on Friday, um, kind of raises a little bit of an alarm that this might not be somewhere where we want to play. And a lot of that you'll see if you start looking through some of the charts and some of the material stocks that you're looking at, uh, breaking key levels that they shouldn't really be breaking when we're performing well. Real estate was performing well. Real estate now kind of dipping down. To be honest, as a growth stock momentum trader, not very many names that populate in this. Consumer discretionary, would like to see how this acts at the 50. We'll see. And that's really all we got there. Let's see. Hold on. Cool. AX is a family member with several decades of experience. He recommends that if I trade CANSLIM, I keep some wrong term to put less pressure on myself, perform reasonable. Oh, 100% reasonable. 100% reasonable. Like, I don't think any of us should be putting all our eggs in one basket. Um, I have a personal, like a margin account. I have like an IRA that's I'm not going to touch type of trading account. You really want to break things up. And this is just like, you don't have all your money in real estate. You don't have all your money in the stock market. You don't have all your money in an ETF. Like, you want to diversify, and, certain things are you have money in your bank account that's available now if I need it, for purchases or for emergencies. I have money that's in my pocket that if I need at the store. I have money that's in a long-term account for when I retire. I have money in an emergency. Like, you break your money up just like you would anything. So 100%. I would definitely not, especially if you're newer, just be dumping all your money into your trading. You want to prove yourself. The reality of it, as a trader, people blow up, people lose discipline, people get emotional, and you don't want to make it where it's make or break. What a lot of people say, and I kind of agree with, is when you're starting trading, make it enough money that it's going to hurt to lose. So you take it seriously and it matters, but make it enough, not too much money where if you lose it, it's not going to affect your life really. All right, stocks to look at. We'll look at Bull too. All right, cool. Yeah. And again, I am not a financial advisor. I'm just telling you guys kind of what I do and what I think generally people talk about. So, all right, let's jump now and look at what's going on industry group wise. We'll bring up my industry group rankings. I got 166 industry groups, used AI and about 3,000-ish stocks to kind of build this out. And it's been pretty good. It's got me into a lot of the leading sectors. So if we're looking at what's going on for this week, let's talk just about top 5 gainers, top 5 5-day winners, 5-day losers. LiDAR. This group is one group that I'm definitely paying attention to. It continues to show strength. Space economy is another group we've continually talked about. We did see a lot of the strength in, again, more defensive names in the oil and gas. Fertilizer, chemicals, I wouldn't say that's defensive name. This is playing into a lot of energy and AI and stuff like that. And then solar, kind of keeping an eye on this because this perking up and we know energy is looking strong. On the 5-day top 10 losers or bottom 10 losers, however you want to refer to that. This doesn't really alarm me, right? Like nuclear, energy storage, crypto. So like some of this stuff, like when you're seeing these higher ranked groups, number 6, this was climbing and looking really strong. This, like, it's 1 week, again, does not make a trend change. And I think that's kind of the theme for what we're talking about. The same way we don't look at 1 day as the end, we don't look at 1 week as the end either, especially when we've gone on the move that we've gone on. So we'll keep an eye on this and see what this kind of looks like next week and see how this week kind of shakes out. Let's look at the rankings though. So it's been clear, right? The AI, the semiconductors, and are probably the biggest, strongest group within the market right now. Memory, data center networking, like those kind of type of stocks that you see on the screen, semiconductor GPU type stuff. These have been really the leaders in the market. The other areas that we're seeing strength, the space economy stuff, Rocket Lab. Yep, I missed that one. Had to sell going to earnings, so didn't have the cushion, and it went on without me, but is what it is. Space economy, satellites, stuff like that's been doing very well. Like I was talking about energy. Anything kind of supplying these data centers has been doing very, very well. The LiDAR has made, as you can see, this little green thing has been a rapid climber, up 82 spots in the last month. And this, just so you guys can see, put these names on your list if you want to take a look at those charts. And what else do we got in here? Semis. That is it. Like I said, a lot of these silver, precious metals, copper, stuff like this has kind of been dropping down the rankings. Copper dropped 12. And this is kind of why I have this right here, just to compare, like, where have we moved in the last 4 weeks, so we can see what's going on in rotation. Because just because semiconductors are leading right now, if they slowly start showing, oh, next week I go, oh, they're number 8, but it's not great if they're number 8 and they drop from number 1. You know what I mean? So part of why all that kind of metrics is there. All right, rapid movers. Haven't been doing this, but I want to bring this up. Just seeing what's kind of made these big changes. Managed healthcare jumped up a lot to 42 spots. Again, the healthcare sector, it's not too alarming to me. We talked about the LiDAR. Solar has made an 80 spot jump. So this is something that's kind of perking my ears up. And I kind of looked, nothing just yet when I kind of did some screening through this stuff, but something I'm going to be paying attention to. More some defensive plays kind of appeared, jumped up. IoT it jumped a lot, but it's still kind of relatively low ranking. Cybersecurity. This though, there's definitely been a lot of movement in the cybersecurity sector. So paying attention to that. You got names that have broken out like CrowdStrike. And what else do I see in here? Anything else that I really want to? Blockchain tech made some jumps. That's really about it right now. To the downside, let's see if there's anything that we should really jump out at us. Yeah, nothing that stands out too much. Unless you guys see something, let me know. But yep, that's where we're sitting at in terms of industry groups. All right, let's jump over to Deepvue. And yeah, what I basically want to do here now is just kind of go through some stocks and talk about some names. I know you guys have put a bunch in here, so we'll go through a lot of what's already in here. The first thing I did want to talk about, right, we were talking about some of these names getting hit. We'll go to the daily, like MU, and this is what I own right now, so you guys can kind of see it. But you have some of these names dropping from the peak. Let's just go from here. Take an 11, 12% drop from those peaks. So as this has gone on a great run, to have that pullback being like a 12% drop, especially if you have a larger position, is going to feel very, very rough, which is why it's important to sell into strength. I forget the exact days, but you guys know I was talking about where I was kind of selling into strength and trimming some stuff into MU. And it makes this pullback less damaging to my equity. If I still had, which I think at my peak was like almost like a 30, 35% position in this, and then I had to take a 12% from the peak drop, like it's going to pull on the emotional strings. Like it's how it's going to be. It's going to be a lot harder. And I know for some people they can handle that. Some people can be super heavily weighted in a name like this and say, this is a leader. I have to be able to ride it down to here. And if I want to have, as Jim Ropel says, life-changing money, but I just know myself, and it's not my style. So there's a couple of ways to approach this, and this is kind of what I was talking about before. And I think the big thing becomes in number one, how much you could stomach, and number two, your frequency of trading and your style of trading. For somebody who is a more shorter term towards the swing trading style, you're probably not going to want to ride a high riding winner like this down too far. And you're probably going to either sell into strength and have trailing stops. For somebody who's more of a longer term position trader, you're going to probably ride this down to the 10 week at least, or the 50-day sometimes. Maybe this one, not the 10 week, but you're going to give this a lot more room, especially when you're looking at somebody who's a true traditional CANSLIM trader. When you got that 8-week hold rule, if that's something that you abide by, you're going to want to hold on to this for a lot longer, especially coming out of a downtrend into a new fresh uptrend. But you have to understand there are pros and cons to both. And this is what really, I think, messes with a lot of people's heads. Selling into strength. You're selling into strength, and very often that stock's going to keep going without you. And if you sit there and you go, oh, I had a 50% more of this position, or technically I double this position and this went on another 20%, I shouldn't have sold. That's not what you're doing. You're trimming into strength because we don't know when the top is coming, and no one's going to be able to accurately, consistently call tops. To the longer term position trader, they have to sometimes stomach big pullbacks, knowing that they're playing in the overall longer term uptrend. Nick Schmidt, if you guys don't know him, he's the weekly chart guy, right? He's going to be probably holding for longer term moves. And like a down week like this, to him, he's not even batting an eye, because it's just, there's nothing. It's just still trending upwards. So you got to really understand yourself and your style and your psychology and what works for you. But selling into strength, there's always going to be that, oh, I sold some of my position, it went on without me. And then holding on, there's always going to be that concern of, I had X amount of profits, now I have X amount of profits, or Y amount of profits. And you have to kind of really do some deep diving to understand, are you that person that's a faster trader that's just looking to make consistent wins? Or are you that person that's trying to possibly land a life-changing, name that you had a huge position and it goes up 1,000%, like kind of the stuff that you read in How to Make Money in Stock. So just something that's going to be very individual to a lot of people in here. Even if you're all trading CANSLIM, everybody's going to trade it slightly differently, especially when it comes to stuff like that. At the end of the day, though, I think selling into strength is extremely important. And that is why Bill has the 20 to 25% profit taking rule, but he also has the 8-week hold rule. So, a lot of this stuff's all out there. I'm not talking anything that is news to, I think, a lot of people, just kind of reminding everybody about it, because when you're looking at your portfolio, things can get very emotional, especially when you got a heavily weighted position. So, and then really Sandisk kind of coming into the same thing, right? So, all right. Let's start from the top. Liz wants to look at ServiceNow. I'll tell you right off the bat, this is completely out of it for me. Downtrend, below every single moving average, still below the 50. There's just the amount of upside pressure on a name like this is a lot. And we have, you can't even really call this maybe a higher high. Stan Weinstein stage, we're still in a stage 4. We haven't even started that stage 1. So this one completely out of the question for me. Why buy something that is clearly, not where the big institutional money is going, when there's so much that is looking beautiful? I get, like, somebody's like, oh, look at this volume coming in, maybe this is the bottom. I'm not bottom picking. I want to just follow the coattails of that big institutional money, and buying a laggard like this is not really my move. Clear, right? All right, looking at this name, look at the weekly first. This is a name that I've kind of talked about. It's been beautiful. It's been trending upwards. I did not trade this. I missed this. This is the type of stock where, like, it hasn't really based. It's just kind of climbing, pulling back, climbing, pulling back. It's a little more choppy, right? Even though, looking at these, like, that's 20% drop. It's 10%, more than a 10% drop. Just giving you guys a rough idea of some of these pullbacks. So for the pullback trader, right, that wants to see something that's in an uptrend, that's kind of pulling in, giving a tight entry, and then bouncing and trying to get that next leg up. This might be that it took out these highs and it kind of closed here. Might be nice. I think the name itself is showing some good relative strength. And it's a name that I'm watching. For me personally, just doesn't give me the type of entry. And if you're in this is acting completely healthy. So that's my kind of thoughts on that. If you need anything else, or you have another point you wanted to bring up about that, just let me know. Oh, Chad, I don't think I saw this. What's up, Chad? What else? Okay, GS. Is that Goldman Sachs? Am I losing it? Yes. Okay. All right, Goldman Sachs. Well, the first thing that's going to kind of pop up at me is this is kind of in that financial realm. It hasn't been really doing well. It is a lower ATR stock, so it's not like the typical momentum names that I tend to like to trade. But we are getting this kind of big big basing pattern right here. If you're looking at it over here, nice big cup, got it right to those all-time highs. From a cancel perspective, the fundamentals aren't really anything to write home about per se, but it's also important to remember a name like Goldman Sachs isn't going to probably have triple-digit earnings and triple-digit sales. So just seeing some positivity and things like that is good. So not the kind of stock that I like to trade. It's coming up near all-time highs. The pattern, the chart looks healthy. If you bought this as a CANSLIM trader, baking out to all-time highs. If you're looking for the possibility, can we maybe get a handle to really form? If you're looking at maybe this is the handle, which I don't really look at that as a handle. Fair, but for me personally, just not the type of stuff that I'm looking to buy, especially in a market like this. It's just been so tech and AI and momentum driven, as you've seen with how the Russell's been performing. Where were we? GS Bull. Okay. So this, it's so beaten up. Okay. Yes. But it's also important to remember, and this is one of those things, we're talking about an IPO stock. We're talking about something a little bit different than something that's been in the market for a while. And there are many opportunities with some of these younger IPO stocks where I've found that you can kind of get in a little bit early as the uptrend starts and you start getting those first higher lows and transitioning into that kind of Stan Weinstein stage one analysis. Stage one, not now, stage one. What is interesting to me, and this is why I personally am not trading this name, but I understand what people are looking at, is we got a 64% move right here from the bottoms. And then now we got this kind of flagging pattern coming out here with a less than a 15% kind of consolidation moving sideways for what has now been 1, 2, 3, essentially like 4 weeks. So we're seeing this kind of bullish, no pun intended, bullish pattern in bull, like it wants to start turning around. We're sitting above the 10, the 21. We're still below the 200 day. So that's definitely a concern. And for me, that kind of like automatically crosses it off the list for me most of the time. But I also understand, again, when we're dealing with these IPOs, this is sometimes you get the rapid run up, then you get the really big pullback, and then you start seeing things turn around. So yes, I believe Webull is a Chinese. I think it's Chinese broker. I know a lot of people that use Webull, like Van Pro. I think you're in Discord. You can ask. I know a lot of people that actually use Webull. I looked into it. It's just I had no reason to kind of switch, but it's a very, very popular broker even in the US. It doesn't say. Where does it say? Oh no, it isn't. We might be thinking of something else. It's in Florida. Okay. So this is not a Chinese broker. Or maybe they're Chinese but headquarters in Florida. I don't know. Found this one. But this, like I said, very popular broker. The fundamentals are good and not the type of stock that I want to trade. But I try because I know there's so many different approaches right here. I can see where somebody on an IPO stock, seeing that's finally kind of maybe looks like it's getting through that IPO due diligence phase and it's starting to make its way around and setting up something that could be an explosive move. Completely get it. So I don't want to say this is stupid. Why would you buy something like this? Because I could see why somebody would want to buy this. I personally, this is just not how I trade. What else? Jim Rope, not that it matters to figure out this is market uptrend, serious legs or not, but I think Jim Rope was discussing if we see GS and MS breaking out, the trend could keep continuing. I didn't see that segment, so I'm not going to kind of comment because I don't know the context of what was being said in there. Infrastructure names look strong, like Fix. Oh man, that one's just like this thing just keeps ripping higher. I always say ripping, and people always say like, what does ripping mean? Is that good or bad? Like ripping higher? I don't know. Maybe it's my Long Island lingo. I don't know. You guys tell me. But yeah, Fix just continuing to just trend higher. This thing has just been not really given much of an opportunity to enter. If you bought it basically on the follow through day, good for you. This thing has gone on. Um, and this is where it's important to sometimes like people look at this and they're like, why the hell would you buy an air conditioning company? Why would you buy a cooling and heating company? What the hell are you doing in this market? It's a construction company. They're huge with data center cooling. One of the bigger players, one of the leaders in data center cooling, as you could see. So yeah, the infrastructure names like that, building out 100%. Let's see what else we got. Oops. This one I don't know off the top of my head. I've seen this. Sterling Infrastructure. Ooh, I like this. Look at this nice little high tie flag we're getting right here. Nice high tie flag on this name. Do I not have this name on my list? Why do I not have this name on my list? This is a good question for me. Why do I not have this name on my list? This is beautiful. Beautiful high tie flag, right? I mean, not 100% move, right? But you have in days, it's not even weeks, we're getting this massive, massive move up, and then that really tight sideways action. This is going on the list. Trying to look at just the weekly on this. It's been trending up for a while, but tons of volume. Let's see if we can hold these lows. This is a, I don't know why I have this up here, VWAP either. This is something I'm going to really keep an eye on for sure. Absolutely. Look at that. In growth in the earnings, growth in the sales, funds getting into this thing, super strong relative strength, ROEs, but the construction stuff, especially like you said, AI infrastructure. This name looks beautiful. So, who said that? Who brought this one up? PJ, huge shout out. Thank you. What's this? Vertex, Vertiv. There's another name that's just been kind of trending upwards. Vistra in a downtrend. This one kind of off the list, and then Weatherford International. This looks actually pretty interesting. Oil and gas. Very, very clean looking chart. Trends pretty well. Not a crazy high ATR. Looked like it tried to break out, pulled back. Real low volume pullback. And now it looks like it's trying to get near those all-time highs. And market might be giving a little pressure on, like, yeah, this is if you want to get in those oil and gas names, this would be a name to look at. Curious. So this is also what's pretty sweet about Deepvue AI. Come in here, I could just do what do they do just by clicking that, and it'll probably elaborate a little bit on what exactly this company does. Oilfield services company, drilling evaluation, well construction, completions, production, intervention, global footprint. Okay. All right. I was just curious if there's anything other than what we expected this name to do. All right, Kitex, as someone who is newer to position swing trading, what is your view on how top themes, sub-industry groups rotate mid-bull runs? I've not seen it myself before. What would you be looking for? Kind of what I was just talking about, that like for me within my rankings, it's that all of a sudden something is showing a lot of relative strength. And that's what kind of my rankings are based off of. But you can see that in Deepvue's rankings, in IBD's rankings. You start seeing something that's like quickly jumping spots. So even in this bull uptrend, right, you have something that is, while everything's going up, it's outperforming even that. And it's jumping ranks. What I would say for that is there are going to be times where you're going to see, right? Let's look at like the solar ETF right now. Looks really, really strong, right? And then let's look at some of these solar stocks though. There are names that don't look that great, right? Enphase is one that looks decent. But then you're going to look at this, you're going to be like, oh my God, why would I buy this? Right? So it's one of those things that sometimes it's going to be, Like Next Power has been really strong. Some of these names are going to not look great. And it's just bringing my attention to the fact that solar might be leading. Now, what's going to happen is in end phase, right? If end phase does break out from this pattern and does turn around from this atrocious looking chart right here, this could rally and base here. This could rally and base here. It's just being aware that this group is starting to show relative strength and tuning into that. Trying to think of examples. It's definitely something that takes a little bit of time, but I think what really helps with this is consistently doing the work, consistently paying attention to what groups are showing up on the daily relative strength, what groups are showing up weekly, and then looking at this stuff every single week to start saying like, oh wow, this is like the 5th day that I've seen like, okay, crypto mining names like HUD. What else? Why am I drawing a blank? Cypher. Nope, can't spell. Cypher. Oh, I have Wolf. Right, these names maybe weren't in the top rankings, but I was consistently seeing these crypto mining names showing up in relative strength every single day. I was consistently seeing these names on my relative strength screeners. Right, I'm running my relative strength screener on the weekend, or I'm doing my daily RS right here, or I'm running my relative strength weekend scan down here. And like I'm seeing like, oh wow, there's a lot of these like crypto names starting to populate. So I think that's the difference between just looking at a pure ranking and being like, I want to buy what's in the top 20. Absolutely. That simplifies things. But I think there's also being in tune with what's going on and being able to see, hey, this group, I see a lot of names showing strength. I see a lot of names starting to pop up. I see them moving through the rankings and watching. You're basically watching that rotation occur in real time. And it's just important to remember as a trader, you just want to continue to stay within your rule set for getting into those stocks, because just because maybe solar is showing strength doesn't necessarily mean there's an entry or it fits my style right now. And knowing that if these names are going to go on a huge run, right? Like look at SanDisk, right? This has given so many entries in the last year. It is absolutely insane. So somebody could say like, this was the time to buy right here, right? Back in September. And maybe back in September, I know this wasn't on my list. I know I didn't buy this then. That doesn't mean if this is going to be a big winner, there's going to be more opportunity. There's going to be plenty more time. I've bought this twice. I've actually made a triple digit gain on this. I bought it back here in like a kind of cheat handle entry. And then I bought it on the gap up on the follow through day. And both of those led to 100% gain. So it's like, yeah, like you may be down here in these trends and be like, oh man, I missed it. Like, look how many, and that was only 2 of the entries. There was even more entries and more opportunities, and more add-ons. So it's just continually staying on top of what's going on in the market and getting a feel and seeing things through your screen, seeing things through the rankings, seeing things through your ETFs, or how like I have my own custom kind of ranking group. And that gives you a feel and helps you really not just say, oh, this says this is leading. I see it visually because I am doing the work every single day. But doing everything within the context of your trading, because just because you're seeing some strength doesn't mean that you should be buying something when there's other opportunities out there. I hope that makes sense. Sorry, you guys know me, I can ramble. Hopefully that entertains it. How do you differentiate between a real rotation mid-bull market versus just the laggers? And that's kind of, like I said, a lot of it's just going to be feel and kind of paying attention to what's going on. Can I look at Avgo, good old Broadcom? I don't know why I always call it Avgo. Look, this is long-term, big cap, massive leader. And it's broken out. It looks like it's wanting to continue to climb. It is hovering right around those breakout levels. I wonder if from a CANSLIM perspective, is this 5% extended? Still within the 5% buy range as a CANSLIM trader. Somebody buying a big weekly pattern. Look, semis are doing well. This is one of those big leading names in that group. Chart looks good. Chart looks good. DY. Was this Dicom? Is this Dicom? Yep, Dicom. Yeah, broke out. It's kind of sitting above, above these. Well, I guess not in there. Sitting above that, kind of close. Broke out, squatted. Looks like it's trying to get in there. And that's something I think that's important to remember. I saw somebody, I forget where it was on a platform, say, the leaders don't return to the gate. Okay, that's a very general statement in my minds. The leaders don't return to the gate maybe when the market had the follow through day, right? When we had that April 8th gap up and the market started rallying, the leaders did not return to the gate in those first, 2 weeks of the trend. Now we're in a different market. We're getting a little more sideways action. We're seeing a lot more stocks moving sideways, pulling back. So yeah, sometimes leaders will do return to gate. This is, I'm going to bring this up. We're going to go back in time real quick. We're going to go back in time to probably an era nobody wants to think about, 2020. And this is stuff, for a lot of you new guys, this will be stuff that it will remain ingrained in your head over the years, because sometimes you'll take life lessons that will continually stay with you, and stocks that will just be ingrained in your memory. AMD. This is 2020. Market corrects. We kind of get opportunities. We get basing, and there was just, I tried to buy this stock, I think twice. I think I tried to buy it here, probably on this exact day as it broke out, because I was much more of a weekly breakout type trader. I believe I tried to buy it here, and it might have been I think there would have been 3 entries that I tried in this name, and they kept pulling back, kept pulling back, kept pulling back. And this thing just did not want to go. And then on this day, when it broke out, I was like, I ain't buying this. This thing beat me up. I was mentally broken down. And my mentor at the time was, has anything changed in this name? Do you really feel like, has anything changed, or is it just that it's just been moving sideways? And in the reality of this, I was just like, no, I think this is definitely a leading stock, and it's something that I should be buying. He's like, so what's making you not buy this? I'm like, well, basically that I bought it and it stopped me out. All right, well, I bought too early. And then it went, and then it broke, and then it went on, and I got a nice run out of it. So the point, I guess, what I'm saying here is, when you're looking at names, DY, like Diacom, right? And again, I don't remember where I heard this, where somebody's like, leaders don't return to the gates. In general, yes, I get that. But when you're looking at some of these bigger patterns, there are going to be points where you get base breakouts, the market or whatever may be going on pulls it in, and it squats, is the term Mark Minervini uses. And I think I like that just because it's it comes out and it's just all right, let me take a little break, squat down and rest for a second, but still hold its pattern and look healthy, and show that, especially with this shakeout right here, with this reversal, as things kind of pop back up, nobody's mass selling into this name. It's holding up pretty well, and this chart looks really, really productive. So, yeah. Very productive. Entry wise for me, to me, this is, I've had this come up my list, but when you got names and this is something I tell everybody, really, really think about this. When you got construction names that look like this, do you want to trade something that looks like this? That's my opinion. Both could be great. Both can go on a huge run. This could be the leader for all we know, but it's just, looking at the technicals, that's just how I kind of look at things. Because you can only have so many names, right? I think most of us as CANSLIM traders, most of our, maybe if you got a smaller account, maybe you're trading 4 names. If you got a bigger account, maybe you're trading 8. But I think most of us are going to be under 2-digit names in our growth stock trading. That, with thousands and thousands of names, it doesn't, do I want to be picking maybe names like this. For me personally, no. Like, I want to be picking the cream of the crop, the best of the best, but nothing wrong with this chart either. Did buy. Yo, much better than last week. Last week was quiet. You guys weren't here. All right, we looked at that. You said you did buy it. Fix, you talked about the follow through day. Still holding, beautiful. When would you buy on a high tight flag? All right, so personally, and I've learned this the hard way. All my notes are still in here. Well, this is going to be a pain to kind of look through. Well, you guys can see what happened last year, right? We got this high tight flag type of setup here. If you're looking at things on the, it's going to be painless to read through this. We got this kind of high tight flag setup over here, right? And I was so bullish on this name because of the fundamentals that I had tried, as you guys can see, like multiple entries while it was moving sideways and got stopped out. I've gone to where a lot of these high tight flags, I would prefer to buy the breakout more than I would prefer to buy the pullback to the bottom. So there's two approaches. You could be buying the bottom range of that high tight flag. Oops, wrong one. You could be buying the bottom range of that high tight flag for those that are more pullback style traders, and using that as a line in your sand to give you a really, really tight risk entry. Or you could be buying the breakout. There's two approaches. I tend to look more towards the breakout. And if something's really, really tight and clean, I tend to go towards the breakout. Sometimes you'll get something that's uniform, where you'll get like a small little handle and like an area to kind of buy there. But something like this, I personally am looking to buy just the actual high tight flag breakout. A perfect example of this is Marvel, or Marvel, however you want to say it, right? Probably bought here. Somebody might have got shaken out here. And then you could have bought here, and it looked like it's wanting to try to go. You know, that would be an example of something similar to that. But then somebody else could have bought here, You know, it's tough because that's the other thing too. You don't know, like, are you going to get an actual pullback to those bottoms, or are you going to get something like this where it's kind of wedging higher and then tightening up here? So there's a lot of there's some of this stuff is tough to go over just on this without, like, you can have a whole entire multi-hour course. Actually, Traderline has a high tight flag course just covering the approach to that. So, Vista Energy. So not really double bottom because we didn't create that second bottom. Chart looks good. Chart looks healthy. Would really nice. This could be the possibility for a really good VCP setup. If you can kind of get a nice little tight VCP setup over here. So, but yeah, I'd be watching this one for sure. Triotech. What does this do? Semiconductors. Yeah, this took off. Massive 43.0. What was this? Earnings? Yeah, earnings move, massive move. If you bought somehow in like the earnings gap, great. If you didn't, super extended at this point. Wait for it to possibly flag out. But here, I'll be honest, I wouldn't touch this stock. And this is the reason right here. Like, I'm not trading a 27.71% ATR stock. The sizing on the position on this would just not be worth my headache for that. A lot of it's due to the size. A lot of it's due to the market cap. Like, there's a lot of things. So I would not be trading this personally. Just be aware that if there is an Iran resolution, oil will tank, size appropriate. So you guys know me. The news, just turn it off. It's just not even like if there is, like, we know, like, there could be the possibility of an Iran resolution. There could be a possibility that doesn't, and that either way, those, like, there's going to be like volatile movement from the market. Um, this bull market trend has come from volatile movement from the market, right? That whole Iran war is what caused the washout of the market, and then whether you want to say it was the resolution or whatever actions happened caused then market to flood back in with a big bull run. So I would rather ignore all of that because to me, like, there's always going to be like, if this happens, this could hurt this, right? Like, if OpenAI comes out and puts a report out about some issues they're having with AI, all these semiconductor names could tank. Absolutely. If like we just had recently, right? This is a perfect example. We had earnings coming out. If Google had came out and said AI is a huge loser for us, it's tanking. We're hemorrhaging money from AI and it's hurting our business, which is a lot of what people were concerned about, then most of these semiconductors and AI names would have got hit. So yes, is the news going to probably move oil stocks? 100%. But it can move it in both ways. And that's also why we have stops. That's also why we are putting an entry in and we have a stop, whether that is caused by the market news, whether it's caused by just normal price action stopping us out, whatever it may be. The news to me is just, it really truly is, to me, one of the most useless things as a trader. I don't pay attention to the news. It is the only thing I try to be aware of is when we have big market um, events like earnings, expirations of options that may be causing some high volume days, to just being aware of like why I'm seeing that high volume, what could be going on. Fed meetings and things like that, where leading into that, we might see really, really tight action. And then knowing like, or, the second half of the day when that news hits, the market's going to have some volatility up or down from that. So it has me maybe be a little bit more cautious in some aspects, but like, just be careful about thinking like too much about what's going on in the news and saying like, compared to the stock, what it may cause and what it may do. I think that could sometimes cause trouble, because the reality is this, right? Somebody could say if there's an Iran resolution, and this is something I always try to do in my head. If there's an Iran resolution, oil is going to tank. Well, what if there's an Iran resolution, but then at the same time, it comes out that these fuel cells are not efficient enough and they don't have enough power, and AI needs to use oil in order to fuel AI. Now, all of a sudden, oil is still good. Or what if there's an Iran resolution, but then there's some other global conflict that's affecting oil that's going on that's still hurting or the price of oil? So there's just so much going on. We're traders. We're not economic people. We're not, and you don't need to be. Just follow the price action. What people are doing with their money is what matters the most. Everybody can talk and say whatever they want. They can sit there and go on and on and on about this, what's going on in global economy, what's going on in the political world, and just everything. What we see on the chart is what people are doing with their money, where they are putting their money. So just take that for what it is. That's just my 2 cents, a little rant on that. A-Lab. All right. Big weekly pattern. Big weekly pattern. As you guys know, I've traded. I've stolen my notes from last year, still sitting on these. Yeah, look, I mean, really, really nice big weekly pattern, strong relative strength, great fundamentals. Like, this is definitely a good looking chart pattern. 100%. Semiconductor name. Also like the relative strength that this was kind of showing more recently while a lot of the names getting hit. And then again, if you're like, well, what does this do in AI compared to everything else? This is probably my favorite feature in the Deepvue AI. And I know I'm underutilizing this. Semiconductor and software connectivity for AI and cloud data centers. Builds hardware, software, hyperscalers, system OEMs. The product is sit in the plumbing of the AI servers. As AI clusters gets bigger, core business in plain English, they're not making AI chips themselves. They're making the connective layer that helps those chips and systems communicate efficiently. Like this just saves me a hell of a lot of time. And I didn't mention this before. I'm a Deepvue partner. If you guys are interested in YouTube, I got the link over there. I got a free month trial code in there, and I got a 12% off an annual code in there. This is the tool I use for all my analysis, as you guys see. So definitely check that out if you aren't. And they're actually dropping a new chart engine, which I'm super stoked for, because it's going to open a lot of doors, and it's going to make some things really, really cool that are going to come out, and feature wise, that's going to make all of our lives easier. So yeah, this chart looks beautiful. Big pattern. A little extended now, like, let's just say we even pull back to there, right? I would like to see this tighten up right around. Ideally, you get a nice handle right at that all-time high, but we'll see. Definitely worth watching. And I think that's what we're seeing with a lot of these names. A lot of these names worth watching, right? Let's see. All right, don't see anything else populating in here. I'm just going through some of the names that I own right now. I did buy GEV. It's holding up right now, right above those lows. Not great, but I'm basically like sitting flat on this, and it is holding above those lows with a tight risk. MU, like you guys know how that's gone on. This name, IPO, really, really tightened up. What's a little concerning about this name right now is we were getting super, super tight. And I'm just kind of speaking out loud. And this is what I do on the weekends with myself too. We were getting super, super tight action. And then we had that break, and then it failed. And then we tried again, and we washed out to the bottom that day. Hit support at the 21, and then tried to break out again and failed. We tried again on Friday and failed. So don't like seeing the volatility right around that breakout point. Like ideally, we would have seen the break and then just run from there, but we don't always get what we want. Regardless, this is a lot of relative strength. I think the market is causing some pressure on this right now. So I haven't got stopped out of it, and I'm just kind of seeing, I have tight risk on this one, so I'm just letting it play its way out. Not getting too scared, not getting too jumpy. SanDisk, Sunbelt, another IPO. This thing ripped. Beautiful, beautiful breakout, and then squatted. Again, I don't know if it's the market that's kind of making it squat back down. But yeah, this was a beautiful, beautiful breakout. I had bought lower kind of down here through the breakout of the handle, and then it kind of continued to go, and then now it's kind of squatted down. Taiwan Semiconductor, this is just a nice, slower moving AI play that's just been really just at first it was respecting the 10. Now it looks like it's trying to respect the 21. It's back above these kind of base levels. And then Wolf, same thing, kind of a pullback buy that I put in on this. It's respecting the 21. My big concern personally right now is a lot of these stocks are respecting the 21. If we continue to wash out more deeper towards the downside, does that mean these names are going to go deeper? I don't know. All I know is I have my stops. They're in. The stocks themselves haven't really made any breaks and have held up and acted healthy. So I'm not going to sit here and try to predict that the market's going to have a deeper correction or pullback or whatever you want to call it and scare me out of these names. And if we continue to have the market go, which I could just quickly flash over the QQQs, if we can have try to run, maybe it pauses here, right? Like if we get some action here and we get another multi-week run, I might be sitting in a perfect position to have these names. If we go down and my stops get hit, and that's part of managing risk. So, all right, let's cap this off. We've been talking about it a lot every single week. Extended market, right? Extended market, making things very difficult. Being aware that an extended market and kind of how Friday felt could put a lot of pressure on your portfolio and could make things a little uncomfortable as you see the equity kind of get hit. But I think it's important to understand your trading approach, understand your risk management. And if you are severely underexposed, again, until we really get a true full pullback, I'm not going to be hammering on the gas going from 10, 20% invested to 100% invested in a day. Um, but I also don't want to say I'm not making new buys, because as you guys can see, I'm making new buys as I'm trimming into strength, gaining some capital in the portfolio to put it and redeploy it. The trend is up. Just understand that a pullback is going to obviously put some pressure, and being extended like we are, that pullback probability is a little higher. So just adjust your risk, and especially your new buy risk based on that. The biggest thing, I'm seeing a lot of names pulling into moving areas. I'm seeing a lot of high, tight flag type action, tight action in the market. Build those watch lists, run those screeners, look for leaders. I think I see that a lot from a lot of people. Oh, look at this. This setup looks good. This setup looks good. That looks good. Okay, that's fine. But is it like, we want to be in the leaders? We want to be in those high momentum leaders. We want to be in the names that are going to outperform the market. And one of the things that I kind of talk about all the time is, like, you want to really, really make sure that you're putting all the odds in your favor: the overall market, sectors, the industry groups, the leading stocks in those industry groups, the patterns, the fundamentals. The more things I could stack in my favor, the higher likelihood I get an MU or a SanDisk. And that stacking of probabilities, as I call it, is what led me to MU and to SanDisk. With that also said, if you guys don't know, I'm going to be on a CANSLIM IBD type style meetup group with Alex and Steve Sweats. They do it every single month. They asked me to come on as guest, and that is actually a topic I'm going to be covering. It's called Stacking Probabilities. That's going to be on Wednesday night, 10 p.m. Eastern, 7 Pacific. I'll be posting that out there so you guys can kind of check that out. But yeah, that's just how I was just talking, reminding me that's the topic I'm basically covering in that meetup. So, but yeah, like, ask yourself for the weekend. I used to do this all the time. I'd be building crazy big watch lists. I'd be looking at every name with the possibility of, like, this could make a big move. I want to be looking at the stuff that has the highest probability moving, that has the most things kind of in my favor, and that are the leaders. And that's what's going to make things much easier, give you a higher probability of success, and more often lead to those big moving names. So keep that in mind. Have your stops every day, every week. Look at your stocks, draw your lines in the sand, understand what's normal action and what's bad action to the downside or good action to the upside, and set your stops and set your alerts. And don't allow the emotions of the market to tweak your decision making. I did it last year with a couple names. I let the emotion of my market, where my stop was a close below the 21 EMA, and I tried to predict that, oh, this is a bad break, I'm just jumping out now. And then it was a shakeout below the 21, and the stock went on without me. That's what happens when you get emotional. So don't do that. And other than that, when you're looking at your stops too, be realistic. Like, I think very often we look at individual stocks, right? We say, okay, if this stock breaks this level, I'm stopped out. If this stock breaks this level, I'm stopped out, right? Oh, okay, I have 7% stop here, 7% stop here, a 5% stop here. I'll pull back to the 21 here is a 10% stop, but I have cushion, so I'm good with that, right? We build these individual stories with each stock. What a lot of people don't do is they don't build that day of a big market down day, where all those stops get hit. They don't, where most of those stops gets hit, or even half of those stops get hit. They don't build that idea in their head. And that day comes, and they originally had all these plans. They were completely comfortable with how the stock would act. I'm good letting it go to this point and then selling. But they didn't think about when they opened up their broker and all their stops are getting hit. And now not only do they see their individual PL on one stock going down, but now they look at their equity and they see, oh my God, I'm down what percent for the day? And then that's where the emotions start kind of going out of hand. So I think it's important to, on top of that, really understand, okay, here's where my stops are for everything. What does it look like if I get stopped at everything tomorrow? Am I going to be okay with that? Am I going to be comfortable? If I'm not, I may be overexposed. Or if I'm not, maybe I need to sell some into strength, or I need to have tier level stops where I'll trim a little bit on the way down. But you have to think about that. And I think that's kind of that next level of risk management, is thinking about the bigger picture of your trading strategy to keep those emotions in control and be prepared, so that when the day hits, it's like you should just, it should almost be on autopilot. You should just know, this happened, I sell. This happened, I buy. This happened, I do nothing. And then you can kind of sit there I don't want to say emotionless, but calmly, and not make any rash decisions based on what's happening. And that'll also expose you if you are like, oh, I have all my stops set that I take a 15% stop loss. So if we have 3 bad days in a row, and I'm going to ride this all the way down to a 15% dip in my portfolio in 3 days, or a 20% dip, but like something to think about too. So, all right. I appreciate you guys. This was really, really good. Last week, you guys were, I don't know, maybe it was a bad time that I picked last week, but this week you guys were in here. You guys were putting a lot of different stocks in here, and it makes it fun for me, and it sparks a lot of different conversation. And this is why I do this live. So thank you. Thank you for that. There you guys have it. If you're on X, there's the YouTube. If you're on X, if you're on YouTube, there's the X. If you're on X, there's the YouTube. Link in the description on the YouTube channel for Discord. And then other than that, like I said, link in my bio on X and in the YouTube description for Deepvue. Sign up if you're interested. Tomorrow, the Deepvue webinar unveiling the new chart engine, which is going to be absolutely sick. So check that out. I think that's all I got. Appreciate you guys. Oh, we got my boy Plas in here. What's going on? Yeah, that's all we got. Thank you guys, and I'll see you.